It's wild, right? When you really stop and think about it, how much the idea of money itself has transformed over time.
Yeah, totally. I mean, we've gone from like bartering actual goods to swiping cards.
And now we're talking about entirely digital currencies.
Exactly. It's a whole different ballgame.
And on top of that, the global financial landscape itself, well, it's constantly shifting too.
Always in motion.
For most of us, I think, trying to wrap our heads around these changes, it's not about, showing off our financial knowledge at a dinner party.
Right.
It's more about understanding the forces that are actually shaping our world.
Totally agree. The world of global finance can feel really complex.
Yeah.
But even grasping the basics of how it works can give you so much more context for understanding what's happening on a bigger international stage.
So for this deep dive, we're going to explore a really intriguing possibility: how blockchain technology, and particularly stablecoins that are pegged to the U.S. dollar, could potentially strengthen the dollar's dominance as the world's leading reserve currency.
It's a fascinating area where we're seeing this intersection of, like, cutting-edge technology and the established power structures of global finance.
Absolutely. And to get a really well-rounded perspective on this, we've pulled together a diverse collection of sources.
Yeah.
We've got articles from publications like Fortune and Payments Dive, and we've also got some more in-depth analyses that delve into policy decisions, market trends, the bigger picture.
Definitely. And what's interesting is that all these sources kind of come at this topic from slightly different angles and with varying levels of detail, which I think is actually really helpful for our discussion today.
Exactly. So today, our mission, you could say, is to take all this information, distill the most important insights about how stablecoins and blockchain could potentially help the dollar maintain its leading position, and explain it all in a way that makes sense.
And hopefully keep it interesting, too.
That's the goal. So are you ready to dive in?
Let's do it.
All right. To understand where these digital innovations might take us, it's helpful to start with a little background, right? How did the U.S. dollar become so dominant in the first place?
Yeah, good point.
Its rise to the top really solidified after World War II.
Right.
With the Bretton Woods Agreement of 1944.
That was a pivotal moment, for sure. And it's interesting to think that the Bretton Woods system basically made the U.S. dollar the anchor for all other global currencies.
And the dollar itself was directly linked to gold.
Exactly, which created, a sense of stability and confidence in the dollar in a time when the world was rebuilding after a devastating war.
Right. That initial tie to gold was a cornerstone. But then, fast forward to 1971, and the U.S. actually removed that direct link to gold.
Right.
But even without that gold standard, the dollar remained the top dog.
It did.
So what were the key factors, the pillars that kept it there all this time?
Well, there are several major forces at play.
First and foremost, you've got the sheer size and power of the U.S. economy, right?
Right. I mean, as of early 2025, the U.S. economy accounts for roughly 26% of the entire global GDP.
That's massive.
It is. And in the grand scheme of things, that kind of economic output just creates a fundamental level of trust and demand for the dollar as a currency for global trade and investment. It's a pretty solid foundation that any potential challenger, whether it's a traditional currency or a digital one, would have to somehow overcome.
It's not just the size, though, right? It's also the depth and liquidity of our financial markets, especially the U.S. Treasury market.
Yeah, it operates at such a scale that it can handle truly massive transactions without causing major disruptions.
That's important.
It is, because think about it. Liquidity is all about how easily you can buy or sell something without dramatically impacting its price. And the U.S. Treasury market is incredibly liquid, meaning that huge amounts of dollars can be traded very quickly and very efficiently.
So basically, it's easy to move large sums of money around.
Exactly. And that ease of movement is really vital for smooth global financial operations.
Okay, and then there's just the straightforward fact that the U.S. dollar is freely convertible.
Right. It can be easily exchanged for other currencies.
And that makes it so much easier for anyone doing business across borders.
Absolutely. It just reduces friction in international transactions.
Is it practical?
Yeah, super practical for everything from like everyday purchases to major infrastructure projects.
We also can't forget about the geopolitical influence of the United States,
Right.
which plays a role as well. And then there's this powerful network effect, right?
Yeah.
Because the dollar is so widely used in global trade, something like 90% of foreign exchange transactions, and it's held as a reserve currency by so many countries, roughly 59% of global foreign exchange reserves.
Wow.
It's almost like it has this built-in momentum.
It does. It's like everyone uses it because everyone else is already using it.
Exactly. But even with all these advantages, are there challenges to the dollar's dominance?
Oh, absolutely. It's not invulnerable. I mean, we're seeing some pretty concrete steps towards de-dollarization from countries like China and Russia, and the rise of alternative payment systems is also something that can't be ignored.
It's a dynamic landscape.
It is.
Okay, so we've talked about the historical context of the dollar's dominance. Now let's shift gears and talk about the technology side of this equation. Blockchain. How could blockchain potentially play a role in bolstering the dollar's standing?
Well, one of the things that our sources highlighted was the potential for blockchain to bring about enhanced efficiency and transparency to financial systems.
Right.
And what's really exciting is how it could potentially revolutionize cross-border payments, which, as we talked about, can often be quite slow and expensive.
They can be.
Blockchain, by significantly cutting down on the number of banks and intermediaries involved in a transaction, could make near instantaneous settlement a reality.
That would be a game changer.
It would be. Think about how long it can take for an international transfer to clear and the fees involved.
Oh, I know.
Blockchain offers the promise of a massive improvement there.
Right, so no more waiting days or even weeks for a transaction to process.
Exactly. And we're talking about potentially billions of dollars in savings globally just from reduced fees. It's a huge efficiency gain.
And then there's this whole aspect of increased transparency.
Yeah, because every transaction on a blockchain is recorded on this shared distributed ledger.
It's all out in the open.
Yeah, which makes it significantly easier to track and audit transactions.
Which could be really helpful for regulators and for efforts to combat money laundering.
Absolutely. It could simplify regulatory oversight quite a bit.
Okay, and if we zoom out a bit and consider the broader context of global trade, how could blockchain be applied there?
Well, that's where the concept of smart contracts becomes really intriguing.
Ah, yes. Smart contracts.
Smart contracts built on blockchain technology could essentially automate a wide range of financial operations that are involved in international commerce.
Give me an example.
Okay, imagine trade agreements where payments are automatically executed the very moment the blockchain verifies that certain predefined conditions have been met.
So it's like, if this, then that.
Exactly. It's about building that inherent trust and efficiency that can be difficult to achieve with more traditional systems.
Okay, that's cool. So say a shipment of goods arrives.
Right.
The blockchain registers that proof of delivery, and boom, the payment is automatically released to the seller.
Exactly. That's the power of smart contracts in action.
So it sounds like blockchain has the potential to really modernize the whole underlying infrastructure of international finance.
Yeah, I think it really does. It's like laying down a whole new set of tracks for global commerce.
Now let's bring stablecoins into the picture.
Yeah.
These are, in essence, the digital dollars we've been talking about.
Sure.
What exactly are they, and how do they fit into this conversation about the future of the dollar?
So stablecoins, as the name suggests, are a type of cryptocurrency designed to maintain a stable value. They do this by pegging their value to a more stable asset, like a fiat currency, often the U.S. dollar.
So it's like a digital representation of the dollar, but it exists and moves around on a blockchain.
Exactly.
And these aren't just a small-scale experiment anymore, right?
No, not at all. As of March 2025, the total market cap for USD-pegged stablecoins was already over $200 billion.
It's a lot of digital dollars.
It is. And there are some major players in this space, like Tether, also known as USDT, and USD Coin, or USDC.
So how do these stablecoins actually manage to maintain their value? How do they stay pegged to the dollar?
Well, the most common method involves the issuer holding reserves of the underlying fiat currency, in this case, US dollars or assets that are denominated in that currency, in a ratio of roughly 1-to-1 with the number of stablecoins in circulation.
Okay, so basically for every USDC stablecoin out there, the company issuing it should theoretically have an actual dollar or an equivalent amount in very safe dollar-denominated assets held in reserve.
Exactly. It's almost like a digital warehouse full of physical dollars.
Like a digital IOU backed by real-world assets.
Exactly.
Okay, that makes sense. So how could stablecoins actually contribute to the dollar's continued dominance? What are the potential benefits here?
Our sources pointed to a few key areas, including enhanced liquidity and greater accessibility.
Okay.
Because stablecoins operate on these blockchain networks, they can move around the world much more seamlessly and quickly than traditional forms of the dollar.
They're more agile.
They are. And this increased liquidity can be particularly helpful in regions with less developed financial infrastructures.
So places where traditional banking might be limited or inefficient.
Exactly. Stablecoins can provide access to dollar-denominated assets for individuals and businesses that might be excluded from those traditional systems.
It's like opening up new avenues for participation in the global economy.
Right. It could really foster greater financial inclusion globally.
And it sounds like stablecoins are already gaining some traction in parts of the world that are grappling with economic instability. Our sources mention regions like Latin America, Sub-Saharan Africa, and Eastern Asia, specifically countries with high inflation like Venezuela and Argentina, where people are using stablecoins as a way to, safeguard their savings.
Yeah, it's really interesting to see how, in some cases, stablecoins are providing this more stable and accessible option in places where the local currency might be rapidly losing value.
Right. So it's like the digital dollar is acting almost as a more reliable financial lifeline.
Yeah, I think that's a good way to put it.
Okay, so we've got USD stablecoins extending the reach of the U.S. currency into the digital realm, enabling dollar-based transactions to happen globally without the need for all those traditional banking intermediaries. And then on top of that, most of these stablecoins are required to be backed by reserves, which are often held in actual U.S. dollars or very liquid U.S. Treasury securities. Wouldn't that actually increase the demand for the dollar itself?
Absolutely. As the stablecoin market grows, so does the demand for the underlying asset, the U.S. dollar, which is used as collateral for those stablecoins.
So it's like a built-in demand booster.
Yeah, you could think of it that way.
And if stablecoins can really streamline global payment systems, making them faster, cheaper, more efficient, wouldn't that inherently make the dollar even more attractive for international trade?
That's the idea. By leveraging the efficiency of blockchain through stablecoins, the U.S. could potentially make the dollar an even more compelling and practical choice for global commerce in an increasingly digital world.
Now, our sources also mentioned the potential for a U.S. digital dollar, also known as a CBDC, which could also utilize blockchain technology. How might a U.S. CBDC fit into this whole picture of maintaining dollar dominance?
Well, a U.S. CBDC could potentially further enhance financial inclusion within the United States itself, and it could also provide new and more direct mechanisms for implementing monetary policy. However, there are some really important considerations with the CBDC, particularly around issues of individual privacy and the potential for government surveillance of financial transactions.
That's a big one.
It is. Those concerns would definitely need to be very carefully addressed.
Right. The idea of a central authority having detailed records of every single transaction is something that deserves a lot of scrutiny and careful thought.
For sure.
One of our sources actually quoted Treasury Secretary Scott Bessent as explicitly saying, and I'm quoting here, "We will keep the U.S. the dominant reserve currency in the world, and we will use stablecoins to do that."
Oh.
So they're not shying away from it. It's clearly a strategic priority.
Yeah, that kind of statement from a high-ranking official really does signal a pretty clear direction in policy thinking. It shows that the U.S. government is actively looking at how to leverage these digital innovations to maintain its financial leadership on the global stage.
So speaking of policy, what are the U.S. government and regulators actually doing in this space?
Well, it seems like there's a growing focus and a lot of attention being paid to digital assets. For example, the White House held a digital asset summit back in March 2025,
Okay.
which is a pretty clear indicator that they're recognizing the growing importance of this sector.
Right.
And there's a noticeable shift away from what some in the industry had called a war on crypto towards a more proactive, you could say, approach to fostering innovation within the United States.
And it's not just talk, right? Our sources mentioned two pieces of stablecoin legislation that were making their way through Congress as of March 2025.
Yeah, the Stable Act in the House of Representatives and the Genius Act, which was approved by the Senate Banking Committee.
And what are the main goals of these proposed laws?
The central themes in both pieces of legislation are transparency, accountability from stablecoin issuers, and, really importantly, consumer protection.
Okay.
Both bills focus on setting clear requirements for the entities that issue stablecoins, especially when it comes to maintaining those high-quality reserves that back the value of those digital currencies.
Right. At least on a one-to-one basis.
Exactly. The aim is to create a well-regulated environment where stablecoins can operate safely and reliably so people can trust them.
So it's about making sure that these digital dollars are truly backed by real dollars or really safe dollar-denominated assets.
Right. And that there's enough oversight to help prevent any kind of mismanagement or shady activities.
Yeah, because building that trust is fundamental.
It is. Establishing a solid foundation of trust and regulatory clarity is crucial if stablecoins are going to achieve widespread adoption and actually serve as a support system for the U.S. dollar globally.
One of our sources also mentioned an interesting development with President Trump issuing an executive order to establish a strategic reserve of Bitcoin.
Oh, all right.
Using cryptocurrency that had been seized or forfeited in various legal cases.
Yeah.
Now, this isn't directly related to stablecoins, but it seems like another sign of how the U.S. government is starting to view and interact with digital assets in a broader sense.
I think you're right. While it's distinct from specific stablecoin policy, the creation of a Bitcoin strategic reserve does suggest that the government is recognizing the strategic importance of digital assets and is more willing to incorporate them into, government holdings and strategies.
So looking at all these different initiatives together, what's the overall goal?
Well, it seems like the overarching aim is to create a clear and consistent regulatory framework specifically for stablecoins,
Right.
to make sure that they operate under appropriate government oversight, and ultimately to ensure that they actually strengthen rather than weaken the U.S. dollar's position globally.
It's all about harnessing the potential benefits of these technologies while managing the risks.
Exactly. The strategic goal seems to be to use these innovations in a way that benefits the entire U.S. financial system and ultimately bolsters the dollar's role in the global economy.
Now, with any new technology or financial innovation, there are always challenges and potential downsides, right?
Oh, absolutely.
What are some of the key concerns or hurdles that the U.S. might face as it moves further into this digital financial world?
Well, one of the biggest ones is the issue of privacy.
Right, which we touched on earlier.
Yeah. The widespread use of digital dollars, especially if the U.S. were to issue a CBDC, raises some valid concerns about the potential for increased government surveillance of people's financial transactions.
It's a trade-off.
Yeah, and finding the right balance is tricky. Implementing really robust privacy protections would be essential for maintaining public trust if digital dollars become more prevalent.
It's not something to be taken lightly.
No, not at all.
What about cybersecurity? That has to be a major concern with any kind of digital financial infrastructure.
Absolutely. Ensuring the security of both the blockchain systems themselves and the stablecoins that operate on them is paramount. Any significant cybersecurity breach could really damage public confidence in the whole system.
And what about the potential impact on the traditional banking system? I mean, if people and businesses start holding a lot of their money in digital dollars, whether it's stablecoins or a CBDC, could that disrupt traditional banks?
It's a valid concern. If a substantial portion of funds move into digital dollars, it could affect the deposit base of those traditional banks, which could then affect their ability to provide loans and other financial services.
So it could be disruptive.
Yeah, potentially. And navigating that potential disruption would require some careful thought and proactive policy management.
Of course, the U.S. isn't the only player in this game.
No, definitely not.
We've heard a lot about other countries exploring their own digital currencies, most notably China with its digital yuan. How does this international competition factor into the U.S. strategy?
It's a major factor. There's definitely a lot of competition in the digital currency space.
It's a race.
It kind of is. And the U.S. really needs to maintain its leadership position in the global digital economy if it wants to ensure the long-term strength of the dollar.
Right.
There are resources out there like the Digital Chamber's U.S. Blockchain Roadmap that emphasize the importance of staying ahead of the curve in this area.
Now, we also can't forget that there are risks specifically associated with stablecoins themselves.
Oh, yeah, definitely.
Like the potential for runs, where a lot of holders try to redeem their stablecoins all at once.
Right, which could cause instability.
And we've seen examples of depegging events, where a stablecoin loses its peg to the dollar, like what happened with Terra's UST.
Right, and those kinds of events can really erode trust.
And then there's the potential for stablecoins to be used for illicit activities.
Unfortunately, that's a risk with pretty much any financial instrument.
All of these risks really emphasize the importance of putting in place those robust regulatory frameworks that we talked about. It's about striking a balance between encouraging innovation and ensuring that the whole financial system remains stable and trustworthy. So when we step back and consider the big picture, the global implications of all this, what could it mean for the future of finance on a worldwide scale?
One possible scenario is the development of a kind of two-tiered global financial system. If, let's say the United States really embraces digital assets more quickly than other regions like Europe.
Interesting.
Yeah, it would definitely create some unique dynamics in terms of how capital flows around the world and how different countries exert economic influence.
But if the U.S. manages to embrace stablecoin innovation in a responsible and well-regulated way, wouldn't that strengthen the dollar's position even further?
Absolutely, it could. By making the dollar even more efficient and accessible in the digital world and more appealing for a wider range of transactions, the U.S. could solidify its dominance.
And having those clear, well-defined regulatory frameworks in place will be key, right?
Yes, definitely. Having those clear rules of the road and established standards will give businesses the confidence they need to invest, innovate, and build robust solutions in this rapidly changing space.
Our sources also mentioned a concept called the stablecoin sandwich model. Can you explain what that is?
So the stablecoin sandwich is essentially a method for improving the efficiency of cross-border payments.
Okay.
Imagine this. You want to send money to someone in another country. You convert your local currency into a U.S. dollar-pegged stablecoin for the international part of the transfer, and then when it reaches the recipient, the stablecoin is quickly converted back into their local currency.
Interesting.
This approach has the potential to bypass some of the delays, complexities, and higher costs that are often associated with traditional methods of transferring money internationally.
It's like finding a shortcut.
Yeah, exactly. It's about finding a more streamlined and cost-effective way to move money across borders.
So in the end, it seems like the U.S. really needs to keep its foot on the gas pedal when it comes to innovating in the digital finance space.
I agree. As more and more countries develop and potentially issue their own digital currencies, the U.S. can't afford to fall behind. The future landscape of global reserve currencies will likely be significantly influenced by how effectively and strategically different nations embrace these digital technologies and how they choose to regulate them.
So to sum it all up, it looks like stablecoins and blockchain technology offer a significant opportunity for the United States to reinforce the dollar's position as the world's leading reserve currency.
Yeah.
By making the dollar more accessible, more efficient for international transactions, and by potentially boosting demand through the reserve requirements of stablecoins, these digital innovations could be really powerful tools in maintaining that dominance.
Right.
However, as with any major technological and financial shift, there are no guarantees. Success hinges on establishing clear and effective regulations, addressing potential risks head-on, and ensuring that the U.S. stays at the forefront of innovation in the global digital currency landscape.
I think that's a really excellent summary of a complex and rapidly evolving situation. The potential benefits are definitely significant, but realizing them will require thoughtful planning, careful policymaking, and a commitment to continuous innovation.
So for you, our listener, here's something to ponder. Considering how fast things are changing in digital finance and the constantly shifting dynamics of the geopolitical landscape, what do you think will ultimately be the most important factor in determining the future of global reserve currencies?
That's a great question.
Will it be the speed of technological innovation, the strength and adaptability of regulatory frameworks, or perhaps the level of cooperation or maybe competition among nations on the global stage? It's something worth thinking about.
It really is. And we encourage you to dig deeper into the sources we've discussed today or explore other related topics that pique your interest.
Yeah, keep learning.
This deep dive is really just the beginning of a much larger and incredibly fascinating story that's still unfolding.
And we'll be here to explore it with you.